Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is August 28th, Wednesday. Again, quickly wrapping up another month here. Quickly wrapping up the year actually, heading into September. We are going to cover one out of the industrial sector, Eaton, powering business worldwide. Before we get too far in the video, if you could do me a huge favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. A lot of you out there who are watching the channels aren't subscribed, and you're watching the channels, so I am assuming you are enjoying the content. So make sure you hit that subscribe button. It really does help out a small YouTube channel like mine. Make sure you click that notification bell so you're notified whenever we put out any new content. We do these stock pick of the day series videos Monday through Thursday. Take a look at a stock on the day that's pulled back and see if it's presenting any value. We also do a portfolio update every Sunday morning. So again, hit that thumbs up button down below. Make sure you're subscribed. Click that notification bell. And a special thank you to all the subscribers out there. The channel continues to grow because of people like you. You guys are awesome. I really do appreciate it. Now, this is the vested interest stock screener. This is how we're going to go through the video. We'll see at the end where this one stacks up. See if it makes 5 of 8 or 6 of 9 to make it onto my watch list. Then I do more of a deep dive into the companies that do make it in my watch list. Look at the financials, see what I'm willing to pay for the company by doing a discounted cash flow analysis, and then potentially add it in the future if it ever meets what I'm willing to pay for it, or if I'm purging some other positions out of the portfolio and adding a new one. I typically try to keep my holdings to around 30 holdings. Let me know what you guys hold in your portfolio. How many holdings do you typically like to have? 10, 20, 30, 40, or do you even have a limit? So we'll run through this screener. You can tweak this screener. It does not work well for companies that are not dividend growth stocks. I know some of you out there may be growth stock investors. This would not be a good screener for that. So go ahead and tweak it to your liking. Now back to Eaton. www.eaton.com is their homepage. That's www.eaton.com, where I pulled this information from. Today, the world runs on critical infrastructure and technology. Planes, hospitals, factories, data centers, vehicles, the electrical grid. These are things people depend on every day, and companies behind them depend on us to help solve some of the toughest power management challenges on the planet. At Eaton, we're dedicated to improving people's lives and the environment with power management technologies that are more reliable, efficient, safe, and sustainable. And that's really what they are looking at. They are a power management company. We are a power management, they said it, we are a power management company doing business in more than 175 countries. Our energy efficient products and services help our customers effectively manage electrical, hydroelectric, and mechanical power more reliably, efficiently, safely, and sustainably by giving people tools to use power more efficiently, helping companies do business more sustainably, and by encouraging each and every employee at Eaton to think differently about our business, our communities, and the positive impact we can have on the world. And some of their products that they offer: actuators and motion control, backup power, UPS, surge and IT power distribution, clutches and brakes, conduit cable and wire management, cylinders, data and video cables and accessories, differentials, ducting solutions, electrical circuit protection, electrical vehicles and EV charging, electronic components, enclosures, energy storage systems. You can read through the rest, but anything that has anything to do with power and power management is really what they are offering in many different sectors, from EV to construction to industrial and others as well. Now, the reason we were taking a look at them, down 0.83% on the day, so not a huge drop. I wanted to look at them anyway. We are talking about Eaton Corporation, ticker ETN, out of the industrial sector. Closed out the day at $293.58. 52-week range as low as $191.82, as high as $345.19. So they are kind of floating in between their 52-week high and their 52-week low. Market cap of $116 billion. Large cap company here. Beta of 1.01, so they are just a tick more volatile than the overall market. PE ratio, this is a little elevated for my liking. $32.30 per share. Would love them back closer to their 52-week low. Then that PE ratio would be significantly lower. EPS, earnings per share, sitting at $9.09 per share. Earnings date coming up sometime between October 29th to November 4th. Forward dividend is $3.76. They are a quarterly payer. We'll see that here towards the end of the video. Starting dividend yield is a bit low at 1.27%, but again, if they were to continue to pull back here towards that 52-week low, you could probably get them close to a 1.6 to 1.8, if not a 2% dividend yield, depending on how far they pull back. Ex-dividend date August 5th, so we are past that. Looks like they paid out on the 23rd. So if you were to buy them now, you would get the next dividend payout, though you're going to have to wait a few months to get it. And a one-year target estimate, at least according to Yahoo Finance, they see it getting close to its 52-week high at $344.51. We're going to jump over here and look at dividend yield theory to see if this one is potentially undervalued. To do that, we'd look at their 5-year dividend yield average of 2.19%, compare it to their current 1.27, or over here where it says forward annual 1.27, same number. Since it is lower than their 5-year average, that speaks to overvaluation on this one, at least according to the dividend yield theory. Payout ratio is very low. I like under 75%. They're at 39.6%, so lots of room to continue to increase that dividend, and their dividend is not in jeopardy of being cut, at least right now according to their payout ratio. Now, I look at free cash flow as well. I like growing free cash flow over the last 4 years, expected into the future. Typically, if a company has growing free cash flow, they grow the dividend along with it. 2020 here, you can see at $2.5 billion in free cash flow. 2021 looks like it dropped to 1.5 billion, back up in 2022 to 1.9, and 2023 back up to 2.8. Now we will repurchase of capital stock. I like to look at as well, and you can see here a big tranche repurchase in 2020, 1.6. And though it looks like they had a drop in free cash flow, some of that can be accounted for. I don't know that all of it is accounted for, but some of that can be accounted for in their repurchase of shares, though they not only dropped their free cash flow, they also dropped their repurchase of capital shares. So 2021 does look like a decrease right there. Though it looks like in 2022 they're back to 286 million in free purchase or repurchase of capital shares. Nothing in 2023. I'd like to see them continue that trend there, even though their free cash flow does look like it rebounded. So looks like a bit of cyclicality in this company. Though 2023 was a pretty good year to look at see what's going on in 2024 sometime. Now we're going to jump over to stockanalysis.com. The previous information was brought to you by Yahoo Finance. I'm not affiliated with either site, and I always recommend more than one site so you can make sure the information you are looking at is accurate and up to date. So these are just two that I like. You pick any ones that you want. Just don't blindly follow just one source for information. Now they do have 17 stock analysts that have taken a look at this. They call it a consensus buy. Low estimate of $238. If it dropped back to their low estimate, that would be an 18.93% decrease from where it currently sits. Average estimate of $327, which was pretty close, a little bit lower than what we saw with Yahoo Finance. That would be an 11.62% increase. And if it happened to hit their high, $385, that would be a 31.14% increase. And you could collect that, around 1.2% dividend yield if you were to buy them now. Now we're going to jump into statistics, look at return on equity and return on invested capital, see how well this company is reinvesting its assets. I like 10% or better for both of these metrics. Return on equity sitting at 19.62%. That's nice. Beats the 10% I'm looking for. But return on invested capital is a little low at 9.53%. Now, I would not let that be a deterrent, but it is under the 10% I'm looking for, so this would not get a check. EPS growth, I like forecast of 5% or better over the next 5 years. They're sitting at 15.55%. Very nice, with revenue forecasted at 8.81%. Very good numbers overall. Let's take a look at dividend history as we wrap this one up. As you can see, quarterly payer, they're saying 41.37. I think Yahoo Finance had them at 39. Either way, under 50% payout ratio, very low. Again, I like anything under 75%. Dividend growth, nice, high single digit, 8.55% dividend growth. Growth 14 years. Buyback yield negative 2.6. They need to be a little better whenever they do their buybacks. Shareholder yield at 1.01%. Going back here in time, you can see they were paying 81 cents back in March 2022. Jumped it up to 86 cents March 2023, and up to 94 cents in March 2024. That was the most recent raise. They do pay out on the March, May, August, November time frame. Actually, usually they pay out March, May, August, then December. So that's a little off the typical schedule, but March, May, August, November is their time frame. Now let's jump back over to the vested interest stock screener here. Understand the business. We got a check there. That's where we started. That's why we go to their homepage and see what they do as a business to make their money. Growing free cash flow. We have an up and down, kind of a cyclical nature in the business, which is not surprising since they do deal with the construction firms, industrials, EV technology, electrical provider that they are, there is a bit of cyclicality around their business. As companies build out their infrastructure, obviously they would do well. Whenever companies look to pull back, they would not. So a bit of cyclicality with this company, so keep that in mind as you're looking at them. Now they do have a growing dividend, so check there. Dividend payout ratio of 75%, yes, under 50%. Dividend yield theory says they're potentially overvalued. It is not within 15% of a 52-week low, and it is not in my portfolio. Return on invested capital, return on equity, I gave them a check there, close enough to 10% for me, but really they did not meet that metric. Earnings per share growth equal to or greater than 5%, so check there. So 1, 2, 3, 4, 5. If you give them the nod on the 9.5%, close enough to 10% for me, they are on my watch list. They will remain on my watch list. I am looking for a big pullback on this company. I'd love them back in around 1.8% higher, dividend yield 2%, all the better. But this one is on my watch list. Again, if you knocked them for the 9.5% over the 10%, I can understand that. I get that. And that would be 4 or 5, and they would not make it on my watch list. Let me know what you think of the company in the comment section down below. Eaton Corporation. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Eaton Corporation that you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below. And make sure that notification bell is clicked so you are notified whenever we put out that video. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping in. Thanks for tuning. Thanks for stopping by. Thanks for tuning in. And we will see you in the next one. Hope you have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investment journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.